Are we being price gouged? And has price gouging from greedy corporations caused inflation? Let's take a look at a few examples and try to answer that question. I just wanted to kind of talk about this article because it kind of sums up how I've been feeling about what the politicians have been saying about price gouging. That's not really the case. In my opinion, corporations aren't necessarily causing inflation. I mean, typically, an increase in money supply is what causes inflation. In this case, we had some complex situations that happened because of COVID. There was a supply shock. A lot of money was introduced into the system. A lot of money was produced as far as Paycheck Protection Program loans and various other things. And we did a lot of deficit spending over that time. So I think the combination of supply shock and money printing is what led to inflation. Now, some people are saying, oh, but it's this gouging that's actually causing this issue. Actually, one of the cool things about saying that gouging is why inflation happened, it's actually easy to prove or disprove because you can look at profit margins to see if companies are gouging and other financials to see if they're gouging. For most scenarios, gouging would show up in profit margins and you would see the profit margins increasing quite a bit because gouging would result in more profit. You wouldn't gouge for any other reason. You're not gouging so you can pay your suppliers more without them asking for it, right? So if you're gouging to get more profit and to keep more of that money, but that's not actually happening. So the Washington Post has this one editorial written by their editorial board, which typically means, they didn't want to have any one person publish the article. This is one way that people can hide behind writing the article because they're getting attacked in the comments, right? Because it's like, oh, you're not coming out and being for Kamala Harris and Democratic policies. And, I think a lot of the people that read the Washington Post probably are left-leaning. I'm looking at this from a centrist point of view. I'm not trying to take political sides. I want to educate people as much as possible. Politicians from both sides lie. It's not like Trump and the Republicans don't lie. They lie. Democrats lie. Libertarians lie. Pretty much any politician across the world, any political party lies. And it's important, I think, for people to be able to kind of spot these lies and figure out ways of actually checking to see if what politicians are saying is true and then weighing things based on that. Now, ideally, everybody would be educated enough that we wouldn't have to worry about politicians lying because they'd figure out, hey, these lies don't work anymore. But the reason why they lie is because it works, because people generally don't know how things work. Politicians especially don't know how the economy works generally, but it doesn't stop them from coming up with economic policies or economic ideas that are bad. So in this case, WAPO saying, hey, price gouging is not causing inflation. And I can say that we can kind of prove that this is true by looking at profit margins. Again, if the profit margins on things that people are selling, if the profit margins for companies aren't going up, then there most likely isn't gouging unless there's some shady, potentially illegal stuff going on with financial records. Still, you'd be able to see that. But I think generally, if you look at the profit margin, which is the percentage of your sales that you're making in profit, or the profit based on your gross sales. But that profit margin, it would stand out for gouging companies. In some cases, the number did go up. And, we'll look at some of these things here in a second. Actually, let me just go to micro trends real quick. But if I pull up this S&P 500 historical profit margin chart going back to 1995, you'll see that the S&P 500 profit margins have been consistently under 10%. It did spike up over to 12% in 2022, January 2022 to 12%. That could be for various reasons. There was a lot of uncertainty, a lot of inflation happening. You can look at inflation graph next to this graph and see that I think inflation was going up quite a bit there. So I think the spike up to 12% was probably not necessarily intentional. They weren't trying to make a lot more money from us. It's just that they were trying to stay ahead and make sure that they didn't have a dip. And if you see here in the 2008 financial crisis, the profit margin pretty much for the S&P 500, for all of the companies in the S&P 500, the average profit margin was down under 1%, right? So sometimes it dips down way below normal. This is the dot-com bubble burst. This is the 2008 financial crisis. This was COVID. But I think we knew that during COVID, companies were still making a reasonable profit. People were still selling things. Walmart kept selling things. Grocery stores kept selling things. Most of the economy had to kind of stay working. I think a lot of the companies in the S&P 500 were probably not so much affected by the pandemic. The smaller companies, the restaurants, bars, hair salons, nail salons, those things probably got hammered during COVID. They're not going to show up here. You can probably go and find, for any public company, you can go and find their financials and see that the profit margins probably are roughly in line with this here. Now, some segments of industries have different profit margins or higher profit margins than others, and it just really depends. I think grocery stores and Walmart typically have under a 3% profit margin, which makes sense. Now, Walmart and grocery stores probably aren't gouging, right? I mean, if they consistently have a 3% profit margin, and that hasn't moved, then they're still making 3%. If the price of milk goes up $5, their profit margin's not going up. Their profit margin is just based on the total sale of the milk, right? So if the milk goes up from like $5 to $7, it's 3% of 5 versus 3% of 7. So yeah, their total profits might go up because prices are going up, but this is how profit margins are designed to be, just like sales taxes are fixed at a percentage rate, right? Because if the government is taxing your money or the sales of products and goods and services, if they're taxing that, they want to be insulated from inflation. So a percentage makes sense. If it was some fixed rate, then as inflation went, the government wouldn't be able to pay for the higher cost of goods and services that they also have to pay for. For instance, one of the big reasons why you saw a lot of the houses, and still it's happening, the government's out reappraising houses because inflation was happening for the government too. Their costs of goods and services was going up and they had to support that. So what do? They have to look at all their tax revenues. A lot of them are percentage rates of sales, which don't need to move for inflation. For houses, they have to reappraise the houses to get their income to scale with inflation and to move with inflation. And the same thing with companies. They want to have a consistent profit margin, and then if they can keep a consistent profit margin, their profits are going to move with inflation. So yes, as inflation goes, profits will go up. But in the end, it's still the same percentage. So a 3% profit margin is kind of like a 3% sales tax, right? So yes, the government is getting more money with inflation. If prices go up with the 3% sales tax, then lower prices. That's just the way it works. That's just math. If you have $100,000 and you get a 20% bonus on that $100,000, that's $20,000. Or if you get a 20% bonus on $1,000, it's only $200, right? So there's a big difference in total. So yes, as the prices go up, that percentage ends up being a bigger number, but it's still the same percentage. That percentage hasn't changed. All right, so we see here, none of these numbers are actually at the gouging level either. The federal government has what's called cost plus contracts, and these cost plus contracts pretty much allow a profit margin of between 10 and 15% for companies. So the federal government's saying, 10 to 15% profit margin is kind of reasonable, right? So none of these S&P 500 profit margins have gone over the 15% number that the federal government has, or at least the S&P 500 average hasn't gone over. Individually, some of these profit margins for individual companies are going to be higher, and it really depends. From here, we see that the profit margins aren't really changing. So let's go back to this article again real quick. So really, I guess my biggest argument is the Washington Post is saying price gouging is not the cause of inflation. And I think I just showed you that the S&P 500 on average isn't gouging anybody. And I've looked at some stores as well, some individual stores, and look at the profit margins of various companies. Let's look at Tyson Foods. So this is a food processor that sells processed food, processed chicken. They sell a bunch of different things, but this is one of those companies that if there's price gouging going on with food sales, you would see it here. It would be pretty obvious. So let's look at the profit margins for Tyson Foods. Again, going back to, 2010, profit margin was under 10%. It did spike up in 2016 to about 13%. It's still under that 15% threshold that the government puts on cost plus contracts. So again, it's still relatively reasonable from the government standpoint. At least this was a cost plus service the government was buying. It would be okay, an okay profit margin. And the highest that it gets is in 2022. Again, let's see. We're looking at the net profit margin, gets up to 7.9%. Actually, I was looking at the bottom one is the net profit margin. That's what you want to look at because this is after taxes. So you paid taxes on your profit and this is what's actually left over that you can distribute to your shareholder. So this net profit margin is actually lower, 2.77%. Operating profit margin is 4% here back in 2013. You see this spike up in 2018 to 7.17. I don't know what happened here. We could look into it later though. And then we can see 2022, there's a spike that kind of corresponds with the S&P 500 graph that we saw as well. So something was happening here where companies were trying to probably account for inflation and then they went a little high. And as you look at this though, the highest that Tyson Foods net profit margin got to was 7.9%. Again, this doesn't look like price gouging, right? We're up here in the 7% in 2018, 2016. It looks like they probably would want to target a 7% net profit margin. It went up to 7 in 2022 and then it corrected. And actually, it's showing that the net profit margin and the operating margin were actually negative starting in 2023. Let me see, where does that start? December 2023, they went negative. So this run up this was a bump up and then they're negative. So you're kind of getting this spike back if you're buying Tyson Foods. So that's one example. Let's look at another example, Walmart. So this is macrotrends.net, and they have a bunch of historical charts for stocks and stuff, which is pretty cool. So here's the Walmart profit margin. And again, Walmart is pretty similar to like a grocery store, and their net profit margins are pretty low. So pretty low is, in my opinion, around 3%. And you can see here back in 2010, Walmart's net profit margin was about 3.5%. See here. Yeah, they had the dip in 2018 down to 1% in October. It looks like the same kind of thing happened here. It did spike up a little bit in 2020. This was still, this was part of COVID. I'm not sure what was happening here, but the spike up here was only to 3.6% net profit margin, which still, it's not that much higher than 3%. It's still under 4%. And let's see what their 2022 spike looked like. The 2022 spiked up to 2.26%. So Walmart's been struggling with profit since I guess since the pandemic. It looks like they've gotten it back up. Let's see how far did they get. But they're still under 3% right now in net profit margin. So it doesn't look like Walmart's price gouging. So let's look up another one, like maybe Safeway or Kroger. And Kroger's a big grocery store. And again, grocery stores typically have a net profit margin under 3%. I don't think you'd want to start a grocery store company if you were looking at a company to get into just based on their profit margins. They're really low. So we look at here, in 2010, the net profit margins were 0.09%. And consistently, the early 2010s, 1%-ish, 1.6%. In 2018, that bumped up to 3%, and then 1% in COVID, and it spiked up during COVID to 2.29%, and then that 2022 bump got Kroger up to 1.69 net profit margin, 1.71% net profit margin. So Kroger's not price gouging, but I mean, if they're price gouging, you would expect that the price gouging's working on behalf of the greedy shareholders and the greedy stockholders, right? Why else would you do price gouging? It doesn't make sense to do it for any other reason. So again, it's not in the profit margin here. So let's look at Target, right? Target's a little higher end company. I expect their profit margins to be higher than Walmart because they're a little different experience going to Target, and Walmart is a little more discount. Let's look here at 2010. So their profit margin was 3.99%, net profit margin around 4%. It dipped down to 2015 to negative 194, popped back up to 4.5. Let's see, COVID was still around 4% to under 4%, so 4 to 3.5%. And then 2022, what happened there? So when inflation kicked off in 2021, their profit margin jumped up. It looks like they had a more aggressive approach to deal with inflation right away. So maybe they raised their prices quicker in preparation for inflation, and they were just ahead of it. But they only peaked at 6.5% net profit margin. So again, I mean, that's way under the 10 to 15% range that the federal government limits for cost plus contracts. So if Target was selling their goods, retail goods, to the U.S. government, they could actually make more profit if it was cost plus. And yeah, again, 2022, 6.5%. Now they're back to under 4% again. So again, Target's not gouging. So let's look at, what's another company we should check? Post down in comments below if you want me to look at some other company, and I can do some deep dives on specific companies as well. If you think that there's a company that's gouging, we can definitely look at that. One of the largest profit margins that I've seen is Apple. Apple has a pretty solid profit margin. One of the reasons why Apple has a good profit margin is because, well, people are willing to pay the premium for Apple products. and Apple doesn't have to lower their prices, so they can make a healthy profit margin. So the net profit margins are actually better than Pfizer's profit margins on average, it looks like, which is actually surprising to me. I thought Apple's would be higher, but it looks like drug companies are the type of companies that you want to start. So yeah, back in 2010, starting at a 21% profit margin. Yeah, during COVID, and it looks like it's pretty consistently 21%. This looks like this was the iPhone launch around that time, so profit margins jumped up to 27% net. COVID, nothing really changed there. With inflation, Apple's profit margin did increase, but again, it's not a crazy increase. I mean, if you look at before COVID, they peaked at about, 23%. With inflation, they're at 27%. So it's a 4% bump up, but they come back down and they've gone back up a little bit to 26% profit. A lot of their profit also is coming from like the App Store, from in-app purchases and stuff like that as well. So anything that's moved from physical before COVID to online is probably going to be benefiting Apple there. And the online stuff, all the extra money that they're making off of app sales, off of digital products and stuff, like there's very little cost to that. So I think they charge like 30% for app sales in the App Store. And that's almost pure profit. There's not a lot of expense to that part. So that's my guess. But again, I still think that this is not showing gouging. If this doubled with inflation, then I would say, yeah, that looks like gouging, but it's not. It went up 4%. I mean, ideally, I would love for it to stay flat, but also Apple is not one of the companies that is driving inflation from a CPI perspective. Like nobody's forced to go out and buy Apple products. And actually with profit margins with Apple, they're designing chips and they're getting more efficient at making their chips for their iPhones and iPads and making boards for their chips. The profit margin might go up just because they've gotten really efficient at manufacturing that, and eventually maybe that drops down again when they come up with some new hardware and there's some expenses early on that they have to take. So I expect that this will kind of be cyclic as well. So the profit's going up now, but it'll probably go down the road when they have some new process that they have to start up. So again, I think we've looked at a few different companies, a few different examples. We looked at grocery stores, food processor, we looked at Apple. And again, none of these profit margins are showing gouging. So going back to the Washington Post editorial, I think my biggest issue with saying that price gouging is causing inflation and we're going to fix it by going after price gouging is, well, I don't see price gouging in the profit margins, so I don't think that's really going to fix things. So politicians will say things to get people on board, and if people are ignorant of economics and ignorant of how to spot price gouging, then maybe people are going to say, oh yeah, this is going to be fixed. And just my mindset is like, hey, whether you're voting for Harris Walz or Trump Vance, there aren't many options for the government to actually reduce costs because the inflation went up because of the supply shock combined with the increase in money supply. And honestly, you can't fix this by having anti-gouging laws because none of these examples that I showed you would actually be covered by those gouging laws overall. But here's a chart of the price increases since January 2021. And January 2021 is when Biden and Harris took office. There was some shock from COVID. I don't think anybody kind of expected what would happen there. So prices went up while Trump was in office a little bit. I think inflation hit like 5% while Trump was in office. And I think it spiked over 9% early on when Biden and Harris were in office. The other thing to kind of point out though too is the president don't have a lot of control over the economy. They have the executive functions that they take care of. They do manage some things, but in the end, if the money supply's been increased a lot of times, or actually most of the time, that's going to come from the legislature. So it's going to come from Congress and Senate voting to borrow more money or to do this or that, or, in some cases, yeah, I mean, increasing money supply is something I think Congress is going to be mostly responsible for. Looking at this, the price increases from 2021 that has everybody pissed off is, gasoline's up 35%, power's up 28%, groceries are up 21%. I think this makes sense. I think, from the grocery standpoint, I feel like this is higher because I've changed what I buy. So I'm buying different products, maybe some store brands. Instead of steaks, I'm buying different meat cuts, or I'm buying chicken. And chicken's gone up quite a bit too, right? I remember chicken being about $10 a chicken. I don't know what it was per pound, but it was like, I could get a full chicken for $10 before the pandemic. And then right now, I think they're between $15 and $17. So, in my mind, chicken prices haven't come back to normal yet. I don't know what necessarily is driving that price, but we could look into that later. Wages have gone up 17% in the same time. I'm not in this group. My wages haven't gone up 17% since 2021. I wish. It would have been nice, but they haven't. Home prices have gone up 16%. In some areas, they've gone up even more than that. Used cars have gone up 14%, apparel 10%, and medical care 8%. So it doesn't even look like the drug profit margins have increased the medical care cost. So again, Ms. Harris says she's going to target companies that make excessive profits. We went through some examples. I don't see excessive profits. The editorial says whatever that means. And yeah, if we're not going by the definition of profit margins and profit margins that are out of whack historically, then there might be some other definition of excessive profits they're looking at. And I think that's kind of scary. Like if you're going to go off of some other thing, then that could potentially cause some problems. And, specifically here, they called out, it's hard to see how groceries, a notoriously low margin business, would qualify. And I showed you the Kroger profit margins. It's super low. I don't even know what motivates grocery stores to stay in business with a 1% profit margin. That's bare bones. It's almost not making money. And the only reason why you're going to have a business is to make money. And if you're not making money, then you're not going to get investments from shareholders. You're not going to be able to get bond money because it's going to be risky, right? So it's really close to nothing. Maybe their real estate's appreciating over time or something, which is probably true too. And yeah, we have tried price controls. I mean, some people are saying, price controls are communist. They're not necessarily communist. We've tried them in the 70s. Republican President Richard Nixon tried price controls in the 1970s and it didn't work. Okay. So the reason why price controls don't work is you can control the price, the end price of something, but you can't control the cost to the business. So if you say you can't sell milk for more than $3 a gallon, and it costs $4 a gallon to produce, then it's going to be really hard to get a company to sell you milk for $3 a gallon if it's going to lose them $1 per gallon, right? So some companies will just bail out. They'll say, I'm not going to sell. I can't sell it for that. Now, there might be some companies that can figure out a way to still make money in that environment. But in a lot of cases, companies will just walk away and say, forget it. This video is getting a little long. I'm going to stop the video here in a minute. In economics, supply and demand isn't something that we came up with. It's not a rule that we came up with ourselves. Thanks for watching the video. Please like and subscribe if you'd like to see more videos like this. Also comment below if you have any suggestions